Hello and welcome back to the channel with me, Fawad Razaqzada, StoneX Market Analyst. So, what now after oil prices delivered a dramatic reversal? After surging on fears of a major Middle East supply shock, crude oil prices suddenly dropped, triggering a relief rally across global markets on Monday and into the first half of Tuesday's session. As oil prices plunged upward global stock indices and the likes of the euro-dollar. But the key question now is simple. Was that the peak in oil prices, or are we now just taking a pause before the next spike? Let's break it down. At the start of the week, crude oil surged as traders feared that escalating tensions involving Iran could disrupt global energy supplies. At one point, Brent crude briefly pushed close to the $120 per barrel mark. Markets were pricing in the possibility of a prolonged supply shock across the Middle East, particularly if shipping through the Strait of Hormuz was disrupted. And that matters because roughly a fifth of global oil supply moves through that narrow passage. But sentiment flipped quickly. US President Donald Trump suggested that the conflict could end sooner than he, and indeed the markets, had expected. That single comment on Monday was enough to send oil prices sharply lower. Brent crude briefly dropped below $83 before stabilizing closer to the $90 level at the time of this recording. The sudden reversal also triggered a sharp rally in equity markets as traders rushed back into risk assets. In many ways, this looks like another example of what traders call the taco trade. It's the idea of the US president often signals aggressive policy moves only to soften his stance later. We saw it with tariff threats throughout last year when markets sold off, then rallied when his tone changed. And this time, traders appear to have used the same playbook. It looks like they have shorted the spike in oil and bought the dip in stocks once again. For now, that strategy seems to have worked, but geopolitical backdrop remains extremely fragile. Trump has warned Iran not to attempt blocking the Strait of Hormuz, and Iran's Revolutionary Guard has responded with threats of its own, suggesting it could hold oil exports from the region entirely. That kind of rhetoric shows just how quickly the situation could escalate again. There are also discussions about emergency measures to stabilize the energy markets. The G7, for example, could release oil into the markets from their reserves, although whether this is still needed is another question, with prices having dipped quite sharply. Washington may also consider easing certain oil sanctions or suspending fuel duties. But ultimately, markets care about one thing and one thing only: whether energy supplies from the Strait of Hormuz will resume flowing normally. Until traders see confirmation that shipping through that narrow passage is stable, the geopolitical risk premium in oil is likely to remain in place. So, where does that leave the crude oil forecast? Right now, the $90 per barrel looks like a key pivot level. If prices stabilize here and push higher again, the next major target could be $100 for Brent crude oil. And if that happens, it would likely put renewed pressure on global markets because higher energy prices feed directly into inflation. But if tensions cool further, Brent oil could ease lower from here, with 85 and then 80 being the next support levels to watch. Either way, one thing is clear: the oil market's now extremely sensitive to headlines, and in this environment, traders should not take anything for granted. Thanks for watching. Don't forget to like and subscribe, and I will see you in the next one. Take care.